trade, and it's because we have such great market movement that I like to trade it. So I want to show y'all, this is a report that I've done, and it shows us all of the majors and how many points each market will move 15 minutes immediately after the market report. So you can see the Dow moves 81 points, the ES moves 42 ticks, the NASDAQ moves 72 ticks, the DAX 109, gold 133. So what I do is typically pick the ones that move the most that I like to trade. So for example, I'm trading the Dow, the DAX, gold, the Euro, dollar, and the USD JPY. And using this market report, I know how much I can anticipate the market to move in my potential direction. Now, I've already placed most of my orders this morning. I have not placed an order on the Dow yet. I was waiting for that to come down a little bit. What I would like to do is take both a long and a short position. Now, that's going to be dependent on the prices too, because I like very low risk binaries. I'm a contra trend trader. Um, I love trading against the trend, believe it or not, but I also have indicators that tell me when I can trade against the trend. Now, in this case, you can see that the Dow has formed a congestion zone. We have this line of gray dots, and we also have this plus sign, which is the ATR stop. As price is approaching this area, you can see that sellers are decreasing, okay? So that tells me this has a potential to go up this morning. So I'm looking for a long position right now on the Dow. And I want to use a spread this morning because we're anticipating a big market movement. And in this case, you can see that we have a spread available from 17,525 to 17,625. And if I click on that, you can see we've got $32 of risk to make $68 profit. So I'm going to go ahead and place that order. Now, I'm a little bit early. I'm trying to get the orders in before the market activity begins this morning. You can also see that this ADX is at 60, which is almost to the point of being oversold. Again, just an indication that this market may go up off of this market report. Okay. Now, let me explain the lines for you. Well, before I do that, let me go ahead and set a profit target on the Dow. On the spreads, we have a floor and we have a ceiling. Now, the floor always acts as support. The ceiling always acts as resistance. It also outlines the minimum, well, the maximum risk and the maximum profits, okay? So, in this case, the maximum profit target is 17,625. That's the ceiling. That's the most I can potentially make. Because this market movement may be really fast, I want to go ahead and set a profit target that's going to be 10 points off of the top of that ceiling. So the ceiling is 17,625. I'm going to set my profit target at 615. Does everybody understand that? Sometimes price moves so fast that we can't keep up with it. I mean, everything zeroes out. We don't have a chance for anything, okay? Um, but if you have a profit target in there and the premium moves as fast as the market does, it'll take your profit targets out, okay? Now you can see on all of my orders, I've set profit targets. Okay. So I've got a long and a short on the euro. I've got profit targets on both. I've got a long and a short on the DAX, profit targets on both. I have a position on gold, the USD JPY, and the Dow. And you can see I've got profit targets on each one of them. Now, additionally, you can see on my charts that I've got a line that shows me whether I'm short this price or whether I'm long this price. So I want to go ahead and add the price where I entered the Dow, and it was 17,556. Since I'm long, I want to keep the green line on there because I know that I am long. And again, I'm still watching because typically I'll wait for the bar to end before I read the volume. And I'm checking this to make sure there's still divergence there. Now, this little gray number here shows me that whether buyers or sellers are controlling price. In this example, the buyers are actually coming in as price comes to that congestion dot. The buyers are stepping in. And I know that because this number is positive. Right now, there's 44 more buyers than sellers. That's exactly what I want to happen. We call that a momentum shift. They're shifting from sellers literally to buyers. That's exactly what I want them to do. Okay. Any questions so far? And I might be talking a little bit fast. I've had too much coffee this morning. You can also see, on the euro US dollar, do you see how buyers are stepping in right now? Now, you need them to step in because they need to break this area of resistance, this line of gray dots. So you really need buyers to come in strong to plow through that area. You also see that buyers are actually coming in strong on the USD JPY. And you can tell that because the height of this volume bar, I know I've made a high because the volume bar is blue, and you can see that it's taller than the previous one. It's taller than this one. In other words, buyers are coming in strong. What you don't want to see is for sellers to come in here and take control. Now, the other thing, we can go in here to 8 a.m. to 10 a.m. because right now I just have a long position on the USD JPY. So as this is moving up, I can come in here and say, hey, is there a low risk opportunity to the short side just in case it comes up to this line and then pushes it down? So I'm watching this as they're doing it. And right now there's $35 of risk. I can wait on this one because it very well may come up to this line. That's what I'm waiting to see if they do. And in that case, I would then have a position to the long side and a position to the short side. And I do use my higher time frames when we have market reports because, for example, yesterday at the ECB press conference, do you see how we developed this line of congestion dots here? This is where I knew more likely than not they were going to take price up at that market report. And that one actually, we realized almost the full profit potential on that trade because we knew they had found support here. Let's go and check and see if we have anything on gold. Right now, I'm short on gold. Let's see if there's any binaries to the long side for 8 to 10 a.m. Gold is beautiful on these market reports. And these are not ones that I want to risk a lot of money on. And the reason that I don't is because, you know, market reports are emotional reactions. They're going to do whatever they want to do. Sometimes, like yesterday, we could see them literally buy in at this level, pretty much like we're seeing on the Dow right now. But they can be wrong just like we can. Okay. What data feed do you get volume on currency pairs? I use Kinetic. Can I enlarge the charts? I can try. That's about as large as I can get without moving everything to my other monitor. Is that better? Now, on some of these, for example, on gold, I did what I call teeny, okay? And that is on gold, I'm only risking, you know, $10.25, okay? And my profit target is at 60. So that's what I call a teeny. In other words, if it moves in my direction, I'm going to make money. I'm not going to try to stay with that for the full, profit potential. I just want to make a small profit on that. I'm only willing to risk about $10 on those on the binary side. If gold has this explosive move, I've made money. Okay. Did one yesterday. I believe it was on the Dow. I realized the full profit potential on that just because it kept going down. There was no pullbacks whatsoever. Um, Kinetic, yes. That's the one I use for Forex. In fact, for NinjaTrader, I use Kinetic all the way around. It's a very fast data feed, Ashish. And I love using it. So, any other questions? I'm still watching this prior to the market movement, and you can still see that there is volume divergence on the lows. So, if we make another high on the Dow, I would want to read the volume on that one as well. How did I get started? I went to work for a company that did programming of um, indicators for TradeStation. And I didn't know that, and this was way back, I didn't know that you could actually see charts live on the live edge of the market. And I just thought that was the most amazing thing I'd ever seen. And I was already a computer expert, so this was just right up my alley. And it's ever changing. I have ADD, so my attention focus on anything can be quite short. And I found that with trading, it actually kept my attention. I was a legal assistant for many years, and then I worked at Duke Medical and designed their first intranet. That was back when we still called it the World Wide Web. We never uh, referred to it as internet. It was just the World Wide Web. It had just come out. And I designed their first intranet. I was always a computer geek. And when I went to work for this company, originally I was there for tech support. But when I saw TradeStation and NinjaTrader and the price bars, I was just like, oh my God, this is amazing. And I've been hooked ever since. No, all the indicators that you see on my chart are actually proprietary indicators, Rick. The plus sign is trend ATR. This is what I call the ATR stop. It will either be red or blue. It colors the price bars according to the plus sign, whether it's, red or blue. It also will change colors like it did here. That tells me I'm close enough to the ATR to take a trade. I am a very low risk trader. If I'm trading futures, if I'm trading Forex, typically the most I'm going to risk on any time frame will be about 15 ticks. Okay. So by coloring the bar, I instantly know, am I close enough to the ATR to take a trade? And then I just offset this ATR by about 5 ticks, and that gets me into a trade on the futures or Forex side. On the binaries, most of my trades are actually under 20 bucks. On the spreads like this morning, I think I've risked $28, on some of the spreads. Other than that, that's it. That's like my maximum risk. The indicator here that you see is called the ADX. It's Very different from the typical ADX in that I know whether it's DMI positive or negative just by looking at the color. Anytime you see magenta bars like you had here, okay, once you get this dot, it tells us it's going to retrace back to the ATR. Remember, I'm a counter trend trader, okay? So I really, really like using the ADX because, for example, here I'm in on this bar, okay, and I'm trading it back to the ATR, okay? Over here, I'm in on this bar, trading back to the ATR, okay? And I do that from higher time frames. For example, on the Dow last night on a 45-minute chart, but you can kind of see it here. I was in on this bar right at the market close yesterday, trading that back to the ATR on the 45-minute chart. And they really give good trades. You see it over here on gold. You had the magenta peak is what we call it. And it comes in here and it goes up. You're trading it back to this ATR. Now, the other indicator that we have, of course, is the volume indicator. And that simply tells me when we have volume divergence. And I'm looking for volume divergence, unlike other people that trade volume. I want volume divergence right at an area of support or resistance. My support or resistance comes from this line of congestion dots or the ATR. And typically it's from a higher time frame. You see it over on the Dow yesterday. We came right back up to this ATR, and this was my point of entry into that downtrend because I knew the ATR was going to provide resistance. Okay. And that's also your lowest point of risk. Instead of taking these breakout trades and you have a lot of risk on them, I take the ones that are in the pullbacks and it comes to this ATR or it comes over here to this congestion dot. And then I'm looking to enter that trade. Does everybody understand that? Any questions on that so far, guys? And yesterday, on the Dow, we actually did 630, and I'm just gonna show you where we went in at, and you can, if you want to see the chart, you can go to my website. I'll type it up for you. Um, and you can read about the trade we did yesterday. But we actually went short at this area, and we did it about 8 o'clock in the morning, so it was while this bar was forming. And we went ahead and shorted, and it was a $10 trade to the short side. And as we watched that trade progress, we were using the 180 and the 45-minute chart. And as I was watching it during the day, originally we had set a profit target. We went in at right around the $90 area short. And I said, okay, set your profit target for 60 because we had some market reports. And it did not take us out. And I said, okay, remove your profit target and I'll show you how to trade this for the duration of the day, because if you're risking $10 and you make 90, that's a pretty good risk to reward ratio. It doesn't happen often, but when it happens, you love it. And that's what we did. And we removed it and I sat with that trade all day. And I mean, it did realize the full profit potential. And this is where the volume piece of it actually comes in because let me bring up the 45-minute chart for that one. Well, I'll just use this one. There was one point at noon, they gave buyers a chance to come in, and buyers were like, "Nope, we don't want to," right here. And you can see that this little gray mark, that's what tells me are buyers or sellers in control. And it ended below zero. So this is sort of like the buyer, well, the sellers came in and said, okay, we marked price down. Do you want to buy it now? Okay. And what they said is, no, we're not interested. You have not marked it down enough for us to consider it a bargain. Okay. So seller said, hey, okay, fine. We'll mark it down some more. So they did, and finally down here, and you can see how they were decreasing. Okay. They came in strong here, gave buyers the opportunity to buy here. It's sort of like a fire sale. Do you want it? The buyer said, no, we don't want it. Okay. And then what happened? Well, they continued to bring it down. Okay. Now, this is where, at 3 o'clock yesterday afternoon, they made a low of 407. Okay. We got this bar. I knew this bar would give me a magenta peak. So then I traded this overnight from here. And this was on the future side of it, not the binary side. But on the future side, I went in long here and took it right back to the ATR. So not only did I make money on the downside on the binaries, but then I turned around and did a long position on the future side of it. And, I was in profit before I ended the day, so I just used a trailing stop to take me out or a profit target up here. It's order cancels order. And it was a beautiful, beautiful trade. But it's where, you can actually see the auction process through this volume indicator because it really is a matter of, you know, uh, have we marked it down enough to catch your interest? And if you don't have the buyer's interest, it's going to continue down. If sellers are not interested, it's going to go up. To me, it's really that simple. Now, for those of you that may be new to trading Nadex, when this market report comes out, these will all zero out. That's normal. Okay. It's, we can't keep up with the market movement that comes in on this market report. Any other questions before the market report comes out? Now, I do suggest that you watch gold. Gold is usually the first one that this market report, and it will be massive. Gold and the USD JPY. Those are the two that I watch the most because they just go crazy. Yeah, that's- It's forecast to be 200K. There are certain market reports like rate announcements. I trade every rate announcement. In the report that I was showing you earlier, if you go to my main website, you can download it. But I've got, all of the market reports in it. I've got the press conferences, the rate announcements, anything that actually moves the market. We did the Bank of Canada rate statement this week on a spread. It was really cool. Um, but, all of that is in this one report. Um, if you are trading at 3 o'clock in the afternoon, how much does the USD Swiss franc move? You just download this report and it'll tell you the average that it moves during that hour, which is really cool because, for example, do I really want to trade the USD Swiss franc during Asia? Not really. Okay, especially during the second quarter and the fourth quarter. third quarter, I really don't want to trade those. Um, the other one is the USD JPY because the binaries, one thing I love about the binaries during Asia, they always offer those, spreads like 4, 5, 6 pips. And the USD JPY is one that I trade just about all the time because, during the second quarter and third quarter, you're only moving about 6 pips per hour. Okay. But I can go out of the money and trade these really easily. Or I can trade at the money and know what I can anticipate that market to move. So there's a lot of information in that one report. Mm. We also had the USD Canadian, the Canadian employment this morning. And in this report, if you go down to the USD Canadian, you would see that the unemployment rate moves the USD Canadian 78 pips. So you could also be trading that one as well. Now, I've already got profit targets on all of these. So if it hits the profit targets, then it will automatically take me out. Now, most of these, I've got 29 minutes on this one, 29. I've scattered them between the 9 a.m. and the 10 a.m.s. And some of them, like gold, is out for the day. Okay. And you can pretty much tell the position that I thought it was going to go in because, like this one, I expected it to go long. It did go long. This one, I'm actually expecting it to come down below here. On the Dow, I'm expecting it to go above this one. In gold, we have not seen much of a movement. That's unusual. Normally on gold, we see a huge movement, but I'm also out for the duration of the day. I was worried about getting all my orders in. You can see on the USD JPY, uh, we're doing relatively good. But now, like yesterday, um, we had to wait a few minutes after the report for these to actually move. Okay. Um, it's moving exactly like we anticipated on the USD JPY. I'm comparing the prices I have here. So yeah, we're starting to see some movement, but it's gonna have to break this ATR to actually move down. We see that sellers are actually coming in. Now this bar, this is usually what you call the pin bar, but right now you see that buyers are still in control because that hash mark is above 0. And on the USD JPY, remember on that one we actually anticipated, let's see, go back to this one. We anticipated 84 pips. So as it stands right now, we've only gone from 73 to 25. I would expect this to go on up to at least 70. Not the typical market reaction that we normally see because these are actually small bars, but I think it's because we had so much movement yesterday. Now on these two, they're actually spreads. On the Dow, it's a spread. On the DAX, we actually have binaries. So if this actually goes up, and we haven't seen a lot of market movement right now on the DAX, but we do see buyers coming in, and that's what I want to see. Now on the DAX, we are out. For the short position, we're out all day. For the long position, we have another 25 minutes. On Wall Street 30, which is the Dow, on that spread, we have another hour and a half. And what do we have coming in at 9:30? Oh, we have the market report. So that one, it would be a really good one to just leave on because they're probably at least going to come up to 605. And actually, my profit target is 615 on that one. Now, on the short with the euro US dollar, you can see that right now the indicative is at 69. That one only has 24 minutes left to go. Okay. And the spreads are nice because you can decrease your risk by using the spreads on these. Because if it continues down, and even if it doesn't make a profit, if it just gets to here, then, on that one we're at break even, whereas the other side we would have lost, but we still have the 9:30 market opening as well. We also have the US opening on the Dow, which I like to do. And sometimes I do stagger these. You know, from the looks of it, I think the USD JPY is going to go up here to 123.60 because I just got that congestion dot being plotted. So I'm not going to exit that trade yet. Um, on the Dow, got the market opening. We're good on that one. On the DAX, I've only got 23 minutes on that one. I am long, but it's also on a binary. So it's really going to have to move a lot in the next 20 minutes. The DAX can do it. It doesn't look like it's going to do it, though. And gold really has not had that much of a market movement. Normally you would get more, but now we're out on that all day long. So with the US market opening, if we get, another $10 movement, we would be good on gold because it will take out our profit targets. And that's what it's all about. On the Euro US dollar, we were expecting 78 pips. And what did we get? 0943 down to 0962. I think we got that 80 pips of movement with 78 pips, actually. We haven't had it yet on the Dow, though. On the Dow, normally we're going to get about 100 points. Hasn't really quite got there yet. It needs to get up to this line to actually give us the full potential movement. Normally, this type of bar, and this is a 3-hour bar. So it's not going to finish until 9 o'clock, which is another 20 minutes. But the way that that bar is forming, it's probably going to go down off of that, the way it stands right now. Now you can also come down here to the um, gold chart, the 12-minute chart. Now this bar ends at 8:48, but do you see how you're getting divergence here on that bar? You're also probably going to retrace this bar. Okay. You could come in to the binaries and say, okay, now I thought it would go short. It hasn't. Is there one that, is a smaller risk that I could take to the upside? I don't see anything on that one. Previous high. So if you think this is going to retrace and retest this high here, you could actually take one of these small ones, and this is predominantly what I do. It's out until 1:30, and say, okay, I'll do this one. I'm only risking $8. Okay. And then set a profit target on it. And you went in for $8.50. So, okay, if it gets to 30, then I'll take profits. Does everybody understand that one? Cam, is this being recorded? Okay, it is being recorded. Now, I would anticipate, the USD continuing in that position. I think the Dow is going to continue because I think it's going to come up here and test this ATR. The DAX, a little bit slow, but I still think it's going to come up. And this is where we can also go and say, okay, it looks like they're going to take the market up today. I would want them to actually flip this ATR first. And then I could say, okay, do we have any binaries or spreads on the DAX that I would be interested in? Um, the 8 a.m. to 10 a.m. I don't put that one. I would wait until 9 o'clock and then do those because you would get more bang for the buck. It's the way I like to say it. Let's see on the Wall Street. Now you can see the euro did move up. Now it's starting to move down, but we're going to run out of time to the downside. Um, on most of these, you can see it was extremely, low risk. This was $10, $20, $10, $8. This one is probably actually going to end up in the money as long as price continues to move up. Now this one is simply based on it's probably going to come back and test this high because you've got this volume divergence here. Um, and that's going to end in about 5 minutes. So as long as that stays, that one's going to end up in the money. The only one that didn't really do what we anticipated is the euro, in that it moved up, but then it immediately moved back down. Okay. And, this is why I like to limit the risk, because trading the Forex side or trading the future side of that, that would have been a massive loss. Um, and you can only go in one direction, which I don't like either. Now, this is the important thing on the USD/JPY. You do not want this ATR to stay. You want it to break the ATR. That means it's got to continue up. If it doesn't continue up, that's when you exit. Now, that one you only have 15 minutes. It is a spread. So as long as I see that price is moving up, I'll probably leave it. Do y'all understand that? Now, today you're not seeing it. Yesterday we saw it, and I just want to point it out to you. Always, look at the indicative when you're trying to decide whether you want to exit a binary or a spread. We're not seeing it today, but we did see it yesterday on the euro. Do you see how the indicative is pretty much the same price as the current market? Yesterday, because of the ECB announcement, and it was so massive, we actually had both a long and a short position on, guys, and both of them were in the money. The short that we had should have been at full loss, but it wasn't. It was actually making money. So the long position that we had should have been all the way, exceeded the ceiling, and it was stuck. So we just had to wait for the prices to catch up. And the reason for that is because sometimes the market moves so fast. They use the last 25 prices, and then they throw out the top five and the bottom five, so they do an average. And it was really cute yesterday. We actually could make money on both the long and the short side, even though we should have been at max loss. And that happens when you have a really, really big market movement. Okay. 514 to 584. We expected on the Dow 81, so it moved just about what we anticipated. 1069 to 1060. This did not move as much as we anticipated. We should have had a $13 movement on gold, and we didn't. Uh, but again, we had a huge day yesterday, so sometimes it doesn't necessarily move as much as what we want it to move. Well, maybe we're going to have a euro rally. Have to wait and see. Now, the gold trade we're out for 4 hours on, and it's right at the point where it's going to start making money right now. Do you see how you had that volume divergence there? So what I'm anticipating is that it will go to 1071.6, 1071.6, which is here. And it doesn't necessarily have to get here because we're out on that all day long. But if it does get there, we were only risking $8 on that trade. Oh, you're welcome, Jean. I have a massive collection. It truly is massive collection of information on my website, including um, videos, just about anything you would want to know about the markets. This is the blog, and this is where I have, a lot of my articles, all of my market reports. And if you just go down here, for example, the market analysis, I do daily market analysis when I feel it's appropriate. You can click on there and get those. I've got videos, I've got binary options and spreads. Um, this is a support and resistance using average true range. So if you click on that, it'll bring it up, I promise. You can see, I did the articles yesterday on the indices. We did the Euro US dollar. Um, and this is the magenta peaks. Also have articles on here about trading psychology and, you know, um, some of the issues that we face as traders from a psychological standpoint. Um, you know, will the Feds raise interest rates? The market volatility report is under those stocks and commodities. I have a stocks and commodities article that's coming out in February on the binary options. So, and I've had quite a few other articles. I was interviewed by stocks and commodities. All of that is there as well. Um, yeah, I do a lot on volume. So, you know, just a massive amount of free information. And then if you're interested in any of the indicators, I do an annual subscription. I just switched over to this model. And I did it because as traders, we deal with technology. Whether you're great at technology or not, this is what we deal with. Okay. And I don't want you using old tools. I want you using, you know, the latest and the greatest tools, okay? Well, the annual subscription, the reason that I did it is because you keep all of your tools up to date and you keep your education and your knowledge up to date. That's extremely important for traders, okay? You know, volume analysis has come a long way from when Wyckoff did it. I still use some of Wyckoff patterns, but there's other patterns that we see on a short time frame that we need to incorporate into our training. So, by going to an annual subscription, you have access to all of the webinars and videos. You have access to updated indicators. In the Diamond package, you even get a 2-day seminar. Okay. And you can do that anytime you want in the year that I'm having a seminar. I generally have two of them a year, and they're limited now to Greensboro because my mother had an accident, so I stayed local for my mom. She lives with me. But, it just gives you for one price, you get all the education, you get all the indicators, and you get the ability to upgrade, to enhance your knowledge. A lot of times, especially if you're just beginning to trade, you can't take everything at one time. It has to be done in small increments. I've been working with a guy for about 2 years now, and we've had to do very small increments because he had so much knowledge. First, we had to start from scratch. We had to discard the knowledge and say, okay, this is what we're going to focus on. You have to learn this, and then we move you a step ahead. Okay. And that's the path of a trader, you know. Um, does 30-year bonds correlate well to the things you look at? I would say yes, because I've got quite a few that trade bonds, David. I don't personally trade bonds, and I don't because they're in fractions, and I hate fractions. That's, I've got people that trade soybeans, corn, you name it, they trade it, but it does the fractions, and I don't do fractions. That's as simple as it gets. As far as when I trade, you know, I've traded US session, I trade Euro session, I'll even trade Asia. You know, SCG, South Carolina? I don't know. Greensboro, North Carolina. You were close. It's North Carolina. It has a real small airport. Very, very easy to get into and get out of. So a lot of my clients like North Carolina, and they like coming except for January. The last time I had a seminar, I think it was January, February, we actually had snow and ice. Thankfully, they were at the hotel. I was the only one that had to drive. But I mean, even then, our snow is not like Chicago snow or New York snow. It's minimal. Any other questions this morning? Now, the special that I have for everyone that was in the room this morning is you do get $200 off either. It'll let me go to it. Told you I've had too much coffee today. Either the diamond package or the silver package, which is here somewhere. There it is. Pretty bad I can't find my package. Um, you get $200 off of the annual package, and I do have videos here that describe the indicators as well. A lot of the indicators I really cannot, you know, show you in a 1 hour webinar. I show you a limited amount. Again, it goes back to, you know, how much can someone take within a 1 hour period. Now, it is $15.95 for the silver package, but today, because you're in this webinar, you can email me directly and you would get $200 off of that price. So instead of paying $15.95 per year, you would spend, you know, $13.95 per year. Okay, and you can cancel it if you decide you don't like it. You can cancel it, and that's it. You don't pay the next year or whatever, but most of my clients actually do like it. Even the ones that thought they didn't like it always come back. It's one thing about it. Well, I'm glad you did, and I'm glad you enjoyed the information. I'm really appreciative of Cam for having me in the room. This is one of my favorite market reports to trade. I love trading it. I love trading any market report. And before I wouldn't trade them. Okay. I wouldn't trade the market openings. I wouldn't trade market reports because as a futures trader, as a forex trader, you'll get killed. Yesterday, great example. Let's say that you were short on the euro US dollar. That price moves so fast, it's hard for you to get out of. But, we didn't have any problem. And I don't have to worry about it. It is what it is. All right. Any questions? I do appreciate Cam having me in the room this morning.
Okay, can everyone hear me okay? I'm just coming back on off mute. Just type in a yes. Excellent. Well, Gail, I want to thank you so much for spending an hour with us and showing the how you trade the non-farm payroll reports. I found it especially interesting about the expected ranges of the markets that you like to trade, the volatility, that you're a counter trend trader, how you approach the market. Your indicators seem to do a very nice job of showing where the buyers and the sellers are, and how you approach doing that with Nadex. I also want to thank you for your generous offer for a discount for your diamond and silver packages. And I've been to Gail's website and read her blogs, and the reviews that I have seen have just been, spectacular. But I do have a question for the room. I mean, Gail was trading, showing how to work with Nadex. Would anyone in the next 15 minutes like a quick overview of what Nadex is exactly? Just type a yes or no. No, yes, no, yes, 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 no. Well, I'm going to go ahead and do a quick overview of Nadex. Anyway, Gene says don't know of it. And you'll get an understanding of what Gail was actually doing. So what I'm going to do is come in and share my screen. And for those that are already trading Nadex and are familiar with it, this could be a refresher course, or I'm glad you stuck around for Gail's presentation. By the way, was this helpful for you on non-farm payroll report trading? Got a yes? Anyone else? Okay, well, I'm going to come in and share my screen. And
Kim, I think I stopped it.
should be popping in here. Can everyone see that okay? Okay, well, here's Nadex in a nutshell. Excuse me, allergies are a little bit tough today. When you trade with Nadex, you are making a decision about where you think the price of a market will be relative to a fixed strike price within a defined time period of your choosing. It resembles traditional trading, but it has the element of a time expiration period that can work to your advantage in trading, and I'll explain that in just a second. So Nadex, you can trade binary options or you can trade spreads. I'm going to talk about the binaries first. They've been called yes or no trades. Every trade is a maximum value of $100 per contract traded. And that means that the absolute most you can win or lose on any contract is $100. You always know your maximum risk and maximum reward before you trade. Once again, you are making a decision about where you think the price of an index, commodity, or forex pair is going to be relative to a strike price within a defined time frame of your choosing. And as long as that trade is active within that time period, you cannot get stopped out. On the non-farm payroll reports today, it's not uncommon to see markets whip one way or the other, or on the crude oil reports. And when the markets get really whippy on the news, it can take out stops on for people that are long or people that are short. But as long as your opinion about the direction is correct, if the market whips, it will not stop you out. You can hold your trade until contract expiration, or you can exit the trade early to preserve profits or minimize losses if a trade is working against you. So let's take an example of this. Let's say it's 12 o'clock noon and the pits close at 1:30 on gold, and gold is currently trading at 11:15 and it's climbing. And you've got a high probability strategy for trading gold futures. All of your indicators agree that gold is on an uptrend, and you believe that gold will not go down in price when the pits close at 1:30. In fact, you think it's going to be possibly well above 11.15, maybe 11.18 or 11.20 or so. If you believe that's happened, you could look at Nadex, and there might be a strike price at 11.10 with a 1:30 expiration. If you bought that market back at noon with a trade that says you believe that the price of gold is going to settle above 11.10 at 1:30, the marketplace is probably going to determine that you're right, and that there's a 70% that that's going to happen. And if the marketplace determines that between buyers and sellers, your risk will be $70 to make $30 on a very high probability trade. Now, conversely, if you felt that gold was not going to settle above 11.10, it's rising, but you think it's going to reverse and settle below 11.10 by 1:30, the marketplace at noon is not going to agree with you, and they're going to determine that there's a 30% chance of that happening. In that event, if you believe a reversal is imminent, your risk would be $30 to make $70 on a lower probability trade. Does that make sense? It's basically you're pitting your opinion about where a market is going to settle within a defined period of time versus someone who has an opposing opinion. And I actually placed a trade today while Gail was talking, and I'll show you what my thought process was when that happened. Okay, so this is a 5-minute binary. This is a very fast-moving trade. It opens and closes in 5 minutes. And I'm going to pull up a drawing tool really quickly. Okay, so this is the first 1-minute candlestick. There's 4 more bars to conclude this trade. You can see what the market's been doing. It's been chopping up and down. And these horizontal lines that I have thick and black here, these all represent fixed strike prices. This red line right here is the expiration. So let's go to where the market currently is. Relative to this strike price here, 15107, how many people think that the marketplace will settle above this line or below this line in the next 4 minutes? Just type an A for above or a B for below. Raji says below, below, don't know, below. Okay, since the marketplace is right at this strike price right now, the marketplace of buyers and sellers is roughly very close to 50-50. So you have $50 risk to $50 reward if you're a buyer, $50 risk to $50 reward if you're a seller. Now, this adds up to $100, and if the person who believes that the market will settle above is correct, he will collect $100, and the person who had the opposing opinion will lose the $50 that they put up at risk. Okay? Now let's go to a different strike price. One of the things that's interesting with Nadex, you don't have to trade where the market is. It's your opinion on where you think the marketplace will settle. So I'm going to go to the strike price, the line above. How many people think it will settle above this line in the next 4 minutes or below? Above or below? Sam says below. Anyone else? I'm trying to make this interactive. Below. Well, the marketplace agrees with you. And if you thought that the marketplace was going to settle below this line in the next 5 minutes, you'd be putting up $83 risk for a $17 reward. If you thought it was going to settle above, that's a very low probability trade. You would be risking $26 to make $74. Let's jump down to the strike price here at the bottom. I'm going to draw an up arrow and a down arrow. How many people think at this lower strike price that the marketplace is going to dive and settle below this line? Below or above? Sam says above. Raji says below. Above. Okay, so the general consensus is that the market will probably settle somewhere between this strike price and this strike price. And guess what? The marketplace of buyers and sellers agrees with you. Down here at the bottom, if you think the marketplace is going to settle above, then your risk is going to be about $87 to make 13. And if below, your risk is going to be $22 to make $78. So let's see how this whole trade actually played out. The marketplace closed exactly where most of the buyers and sellers thought. It closed right here, and if you were at that middle strike price, if you were one of the people that chose below, you would have collected $100. If you would have been the person that selected the market to close settle above this line, you would have lost your $50 put up at risk. Up on the top, if you were a seller, you collected $17 on 83 risk, and down below, if you were a buyer, you collected $13 on 87 risk. So when you think of risk and reward, if something you believe is absolutely safe, and you're dealing with a range-bound market, you know, you're putting a lot of premium at risk being a seller from the upper strike and a buyer from the lower strike. But if you've got a good plan, if you have a good strategy, it's a very nice way to collect money. Did that make sense how that trade played out? And this was a 5-minute trade. I mean, these are very, very fast moving trades. With Nadex binaries, you can trade 5-minute expirations on selected forex pairs. You can have 20-minute trades on U.S. indices. You have trades that expire every hour on the hour, and there are daily and weekly binaries as well. So you can choose how you want to trade the market. Now, just for the example, I've talked about binaries. Really quickly, I'm going to talk about Nadex spreads. And I'm going to use this chart just because it's up as an example. Let's pretend that this is not a 1-minute chart, but rather it's a 15-minute chart. And what you're doing with a Nadex spread is you can select a time frame, and I'm gonna say, oops, this morning. Let me back up here. Okay, I'm sorry. I'm gonna say that let's say that this box here represents a 2-hour time period. Good. And if you're doing a Nadex spread, let's say you've just gone into this box right here. You have a couple of green cards. You see a reversal, and you want to sell the market. Well, you can sell the market anywhere you want to in here. And if you sold right at this level, then this area right here would be your maximum risk. Call that your margin. You're putting it up. And let's say that the length of this box is 200 ticks or 200 pips. So the value of this entire box vertically is $200. And let's say this area right here represents $40. That's your absolute maximum risk. And this area down below represents $160 for a total of $200. every tick is $1 per contract. And so if you bought 10 contracts, you could get the same leverage you would on, on a standard lot forex contract. The whole thing about this is, as long as this trade is active, you can't get stopped out, and your maximum risk is defined. So you can't have a stop get blown out because your ceiling is there and you know it. So you have the safety of trading with defined risk, and you can enter and exit any way you want in this time period. If as the market dropped down here, if you picked up 50 ticks, that might be a good profit target, and exit with a $50 per contract profit. Great. If the trade moves against you, like it did in this green bar right here, that might have gone 10 ticks against you for a $10 loss if you felt like this trade was completely moving against you. So spreads resemble traditional futures and forex trading with the added security of knowing that you cannot get your stops blown out. Did that make sense? And your
Right,
and your risk is defined. Both of these are options for trading with Nadex. So it's a different way of trading. For my personal trading style, I like it because I don't like trading knowing that I can lose more than I put up. I want to know that if I have a bad day, I know exactly what I put up at risk, and I can't lose anymore. Nadex is a North American derivatives exchange. It is a wholly owned subsidiary of the IG Group, which is listed on the FTSE Index in London. It is headquartered in Chicago, and it is subject to strict regulatory oversight by the CFTC. When you trade with Nadex, you're not trading through a broker. So you don't have middleman commissions. You're placing your orders directly on the exchange. Your funds are held in a segregated U.S. bank account, and there is full transparency on every trade. Nadex is not allowed to take market positions, so you're not trading against Nadex. You're trading against someone who has an opposing opinion to your opinion on where you think the price of a market will settle within a defined time period. Nadex was previously available only to legal residents of the United States, Canada, and Mexico, but it is now open in 47 countries. And if you go to nadex.com, you will find out what those countries are. And really, when you place a trade on Nadex, everything starts up on your opinion where the direction of a market is going. There are lots of markets you can choose from: forex, pairs, stock indices, commodities. And then you want to choose the assets you want to trade, like Gail was talking today, the USD JPY. You could trade the E-mini S&P or other US indices, gold, crude, and several other commodities. And once you've identified the asset you want to trade, then you want to select your time frame for the trade. Do you want to trade on a weekly expiration, end of day, on the hour, 20-minute or 5-minute binaries if that's your style? And after that, you select the number of contracts you want to trade, you want to pay for that contract, or how much you want to put up at risk. And then you place your order directly on the exchange. When your order is active, you can close your position early and preserve profits, or you can let your binary option expire. How much does it cost? First of all, with Nadex, you can open up a 2-week demo account for free. It's funded with $25,000 in play money. If you like it how it works for you and you want to actually fund an account, the minimum funding for a live account is $100. Exchange fees, you don't pay broker commissions, you don't work through a broker, but Nadex makes its money by collecting exchange fees of 90 cents per contract per side. The maximum exchange fees per side that Nadex will charge on any trade is $9. So if you trade 10 contracts, you're paying $9 per side in exchange fees for a maximum of $18 on a trade that you successfully open and close. If you trade 20 contracts or 50 contracts, your round trip exchange fees are still capped at $18. And one of the most unique things that I particularly like about Nadex is if you place a trade and the contract expires out of the money for a full loss, you're charged your order at 90 cents per contract to enter the trade, but they do not charge the settlement fee on the back end. So if you have a bad trade that expires out of the money and you forfeit your money risked, you are charged for it getting into the trade, but you're not charged a settlement fee for getting out. And I'm not aware of any other platforms that are that generous when it comes to dealing with a trade that's a loss. Quick summary. Binary options are a simple yes or no proposition. You're dealing with limited trade risk, and you always know your risk and reward before you place a trade. You have multiple markets that you can trade. You have spike protection because you can't get stopped out. And Nadex is regulated by the CFTC. Funds are held in a segregated account, and it's easy to deposit and withdraw funds. So what I'm going to do in closing is while Gail was presenting and talking about the USD JPY, I took a trade, and I took it at 8:05, 5 minutes after she started talking, or actually after I got done introducing her. And in time, the market was trading. Let me get my drawing tool again. At that point in time, the marketplace was trading right here at about 122.90. And anticipating market move, I had a buy order in here that was what's called an out of the money market. My expiration, so I had a half hour in the trade after the release of the non-farm payroll reports. And when I bought the market at this strike price up here, at that time at 8:05, the marketplace didn't agree that the marketplace would move that high. My risk was assumed on this trade was 36.50 per contract for a maximum reward of 63.50. When the non-farm payroll reports were released at 8:30, the marketplace spiked. It spiked up through my strike price offering. It moved up, and then it started a reversal. And right when it was at the top, this contract was already up $40, and I exited the trade and took a sure thing. As it turns out, that was a good instant because it reversed, came up a little bit, then it dove, and ultimately it settled down here somewhere. So if I would have stayed in that contract to expiration, I would have been out the 36.50 that I put up at risk. Instead, I took profit for 40, yielding better than a 1-to-1 return on capital risk. So that's what I was doing behind the scenes when Gail was presenting. Are there any questions about Nadex? And did this make sense? Yes or no? Anyone there still with me? Well, once again, I want to thank everyone for coming up to this presentation with Gail Mercer, trading the non-farm payroll reports, and my little brief explanation of what Nadex is on the tail end. Once again, if you want to try out Nadex and see how it works for yourself, go to, I'll type it in, tradingpub.com slash, oh, Yana's got it, tradingpub.com/demo. That'll start you with a 2-week demo with $25,000 in play money. And also, we have some books. If you go to Trading Pub or Market Deal, there are 2 books that we've published on trading with Nadex. One of them is called Trading Made Simple. Let me get out of all this and see if I can find my little book slide. It's called Trading Made Simple and Nadex Warriors. Between these 2 free ebooks, you're going to have 22 Nadex trading strategies on different times of day, different instruments, commodities, indices, forex pairs, spreads from nine 8x educators, and there's great information. These books are written cookbook style, and you can find a strategy very quickly that mirrors your particular the instruments that you like to trade, the assets you like to trade, and the time periods that you like to trade in. So once again, I want to thank everyone for showing up, and I just hope you have a great weekend and a successful day trading. This is Cam White with Trading Pod.